Welcome to the SMBU daily video, how to trade Twitter. So Twitter reported last night. It traded down in the after hours quite a bit, and it did so because of this reason. Their monthly active users, or their MAUs, they missed consensus. So the consensus for MAUs was 324 million, and they came in at 320 million. So they missed that number. This is a key metric for the core strength of their business. This is what the street is most interested in for Twitter. And if you take a look at our longer term monthly active users chart right here, you can see that Twitter has been growing, but it hasn't been growing as fast as lots of people on the street want. And for a growth company, it's not picking up as fast as other growth companies tend to. So this is the key metric we're looking at. If you take a look at Twitter's user growth since 2011, that growth has not been accelerating. And that's one of the reasons why it's not doing as well as, say, Facebook. So at the beginning of this month, Twitter named Jack Dorsey, @Jack, to be its permanent CEO. This is the first report after @Jack regained the helms as the CEO of Twitter. I think it's interesting to point out, if we take a look at Twitter's in the social media space, that Facebook has done particularly well, has done really, really well over the past couple of years. And you can see Twitter has sold off quite a bit from its highs, and it's sold off quite a bit. You know, Facebook's doing pretty well, LinkedIn's hanging in there, but if we take a look at a chart for Twitter, you can see that this is well off its highs. And so all of that played into how we would trade Twitter today. They missed on the MAUs, and normally when we would see a number like that, we'd be focusing on the short side. But Twitter, as we show from the chart, is off a lot from its highs. And Twitter, as we can see from this article, has a new CEO who was named, who perhaps people want to become excited about. And Twitter was opening up quite a bit down. So you can't just look at MAUs and say, they're down a lot, let's get short. You have to see it in the context of the big picture. We opened up, and there was a really nice pop away from $28, which I highlight on this chart. Pops up to the 28.60-ish area, down from the lows of 27.75. That pop perhaps foreshadows that there's real buying to come. That was a very significant pop right on the open. We pull back into that area, the 27.90 area of support, and I started a long position into that 28, into that 27.90-ish area with stops below low of day, that 27.75-ish area, because we're down a lot. To me, this news pattern wasn't a finished low of day news pattern. Twitter had sold off a bunch already. I did see the support on the open around that area. My risk reward was really solid. If I was going to be wrong, I wasn't going to really lose that much. And if I was going to be right, I thought I definitely had a trade up towards through 29. 29 was an area in the after hours that I noticed when I was trading it right after their release. So I felt like my risk reward was really solid. I had probably 25 cents to 15 cents of downside, and I had $1.50-ish of upside for that particular trade. So you can see that's a good area to buy. The other area to add to that position was, and you can see right here, I say buy, momentum is back to the upside again. When it clears above at 28.57 area, at 28.50, 28.57-ish area. Now the momentum is going back to the upside. It started to stall a little bit and roll over from the high 60s and then the 50s, pulled right back into VWAP, held VWAP perfectly, and then started its upward momentum again as it clears that 50 cents area. And Twitter did come right back into that VWAP. Spikes right through that 29-ish area. For me, that's where I took most of my position off. That was the main trade that I was thinking about from right on the open. But there's also another trade that you got to think about from that 28 area, and also because of the facts that I laid out, which is fill in the gap trade. Buying the 28s against the low of the days for a fill in the gap trade. That's not going to have a high win rate, but if you feel like the MAU story is already baked into the cake with Twitter, and you feel like there is optimism with a new CEO, and you feel like the stock has really come off, and you feel like a lot of other social media stocks are doing really well, and you feel like Twitter is a buyout candidate, which is I think something that is in the minds of lots of people, that is a good area to think about trading for a fill in the gap trade. And look, I think there are people who own this stock who are investors thinking that I wonder if they're going to get bought out. Even if Twitter doesn't do that well, even if it doesn't become as good of a company as it can be, right now Twitter is thinking of ways to make it easier for people to use their platform. That is a big distinction between Facebook and Twitter. It's easy to use Facebook's platform. It's harder to use Twitter. There's so much information that comes at people. The people who use Twitter, the general mass, wants Twitter to find ways to make it easier for them to aggregate information better. And they're starting to try and do that, where recently one of the first ideas that @Jack had was moments. That's their big new idea. That's something that he certainly talked about a lot during the conference call. It's a way to make it easier for you to see the trending news items on Twitter without having to search everything. Twitter has a great platform, but when you see ideas that are going to make it easier for people to use their platform, that can be catalysts to make this stock go higher. And the reason why people are picking at it, even though the stock is down off of high so much, is because there are a lot of people that can look at Twitter and say, I can see a lot of ways for them to improve their platform. I can see a lot of ways to make it easier. They offer a great service. Lots of people really love Twitter. It's a great way for people to get information quickly. And so that's what's going on in Twitter longer term. And those are the potential news catalysts to look at going forward. How can we make Twitter easier to use? And there'll be a lot of trading opportunities with that. So that's how we attack Twitter a little bit on the open. Two different ways to play it. That's what we're looking at for Twitter going forward. I hope that helps. We'll talk to you guys soon.